Imagine waking up one morning and finding out the backbone of America's economy, our debt, is being silently yanked away by the very nation that once held it up. No explosions. No invasions. Just a spreadsheet. No alarms, no headlines, just a quiet, calculated exit. And yet, it may hurt more than any war. This isn't fiction. This isn't theory. This is happening right now. And Donald Trump? He's fuming, watching the foundation of American power slip through his fingers without a single shot fired. Before we break this all down, don't forget to like this video, subscribe to the channel, and hit that bell icon so you never miss a moment that the mainstream media won't show you. Now, let's dive into what's really happening. A silent collapse begins. In just 6 months, the US dollar lost over 10% of its global value, its worst start in more than 50 years. That's not a statistic, it's a red flag. Behind the scenes, the storm is brewing, and the rest of the world is beginning to walk away. In April alone, China dumped $8.2 billion in US treasuries. That single act was just one more cut in a bleed that has erased over $600 billion from China's US debt holdings. Most Americans didn't even notice. The media didn't scream, the headlines didn't blare. But beneath that silence, a financial earthquake is quietly building, threatening to reshape the global order as we know it. Main Street's quiet crisis. But on Main Street, people are starting to feel the strain. Retirees in Ohio, teachers in Michigan, and small business owners in Georgia are watching their pensions shrink and their costs rise. Nobody's explaining why. That's because this isn't about treasury bonds anymore. It's about broken trust. China isn't just selling numbers on a screen. They're sending a message: they no longer believe in the US dollar. And Washington? It's waving flags and pretending nothing's wrong. Meanwhile, everyday Americans are left holding the bag, confused, frustrated, and increasingly abandoned by leaders more focused on politics than protecting their financial future. The silence is deafening. The trust is gone. Since 2012, China has sold off nearly half, 44%, of its US bond holdings. But it's not doing it loudly. No press conferences. No threats. Just a quiet exit, as if they're politely excusing themselves from a dinner they no longer enjoy. That's the real danger. The silence. The kind of silence that says, "We don't trust you anymore." And that silence echoes louder than any speech, rippling through global markets, spooking allies, and signaling a shift that can't be undone with empty reassurances or patriotic slogans. Once trust is broken, there's no going back to normal. Tariffs, tantrums, and $1 trillion mistake. So what sparked this exodus? Look no further than Trump's tariff war. In April 2025, the administration hit China with a staggering 145% import tax on electronics and auto parts. Publicly, it was branded as strength. Privately, it reeked of desperation. You don't pick a fight with your biggest lender and then expect them to keep giving you money. That's not strategy. That's delusion. It's like burning a bridge while still standing on it, hoping your enemy will build you a new one. China's financial retaliation. Beijing didn't send warships. It sent a message with a spreadsheet. They stopped buying US treasuries. They started selling. And Washington didn't even blink. While the president took victory laps, the floor beneath the economy started to warp. $8.2 billion may not sound like a lot in the grand scheme of things, but it's not about the amount, it's about the intent. That was a warning shot, and no one's listening. It's the economic equivalent of a cold slap across the face, a move so calculated that even allies took notice. And yet, the silence from DC only grows louder by the day. Why this hits home? US Treasury bonds fund everything. From Social Security to Medicare, veterans' pensions to road repairs. According to the Congressional Budget Office, 25% of all federal spending in 2025 will be covered by debt. So, when China stops buying that debt, someone else has to step in. If they don't, the government has two options: raise interest rates or print more money. One makes borrowing more expensive. The other makes your dollar worth less. Neither is good. Both squeeze the middle class, shrink retirement savings, and drive up the cost of everyday life. It's not abstract anymore, it's the price of eggs, rent, and gas. Passive sabotage in action. Oxford economist Maya Klein said it best, "This is not financial rebalancing. This is passive sabotage." While Trump brags on stage, bond buyers are quietly disappearing. The future of Social Security and Medicare isn't being debated in Congress, it's being undermined by empty Treasury auctions. Each failed auction is a whisper of doubt from the global market, a sign that faith in America's financial credibility is fading. And as demand dries up, yields climb, borrowing costs skyrocket, and the programs millions rely on slowly begin to unravel, one missed buyer at a time. The gold standard strikes back. And China isn't just walking away, they're running towards something better. Since early 2023, China's been stacking gold, 80 tons a month. By mid-2025, they've surpassed 2,300 tons, and analysts believe the real number is even higher. Why gold? Because gold doesn't tweet. It doesn't need approval. It doesn't lose value because of late-night tantrums from the Oval Office. Ditching the dollar. China is hedging against a currency run by a president who treats foreign policy like a game show. And the market is noticing. Bloomberg projects gold may hit $2,600 an ounce by late 2025. Meanwhile, Trump is on stage claiming victory, while global markets slowly back away. Nations from Brazil to Saudi Arabia are shifting reserves, cutting exposure to the dollar. The quiet exits are becoming a stampede. The human toll. Meet Michael Simmons, a Navy veteran from Ohio. After 26 years of service, his pension fund is now reassessing exposure to U.S. bonds. He doesn't understand the jargon. But he understands fear. Are they gambling with my retirement, he asks. Sadly, yes. Millions of Americans are in the same boat, their 401(k)s and pensions tied to bonds that are losing value fast. And as the dollar weakens, everyday essentials, groceries, gas, healthcare, get more expensive. Michael's not worried about Wall Street. He's worried about affording next month's bills. The domino effect. As foreign demand for treasuries drops, interest rates rise. That slashes the value of existing bonds by 10 to 15%. Retirees lose. Investors panic. And small businesses suffer too. Credit lines dry up. Banks get cautious. Layoffs begin. According to the National Federation of Independent Business, credit access hit a 5-year low in June 2025. Startups delay launches. Family-owned stores struggle to make payroll. It's not just a Wall Street problem, it's Main Street's slow bleed, spreading through communities that were already on the edge before this crisis began. The capital flight. In 1 week alone, June 2025, over $9 billion left the U.S. stock market. Half went to Japan. A third to Europe. Why? As an HSBC analyst put it, they're not fleeing danger. They're fleeing chaos. And chaos doesn't wear camouflage. It wears a red tie and stands behind a podium. It issues midnight executive orders and tweets economic policies before breakfast. Investors aren't just moving money, they're moving trust, confidence, and stability. And once that trust is gone, it rarely comes back without a cost. The world is rebalancing. BlackRock increased its exposure to Europe and Japan for the first time since 2008. Bank of America dismantled its dollar clearing operations in Europe. This isn't temporary. It's a global repositioning. The world is tired of waiting on U.S. policy mood swings. The dollar isn't the sure bet it once was. It's now a liability on spreadsheets, a risk factor in investment models, and a flashing warning light for those managing trillions in global capital flows. A president's reckoning. Trump promised to make America great again. But in the eyes of investors and global markets, he made America unpredictable and hard to trust. When your lenders disappear, your strength means nothing. And the terrifying part? The administration doesn't seem to care. They're chasing headlines, not stability, trading long-term trust for short-term applause while the economic foundation quietly crumbles beneath their feet. The empire and the echo. It took a century to build American financial credibility. It's taken one term to begin its unraveling. As China sells off another $8.2 billion without even a whisper, the silence speaks volumes. This isn't a scare tactic. It's a consequence. And it's only just beginning. Empires don't fall with explosions. They crumble through cracks, one missed bond payment, one late pension check, one disappearing investor at a time. America still has the power to lead. But leadership isn't about tariffs or podiums. It's about trust. So, let me leave you with a question: can the dollar survive the next decade as the world's financial anchor? Drop your thoughts below, and if you found this eye-opening, make sure to subscribe and share this video before more silence spreads.